Bitcoin Trend Analysis, January 24th, 2026, Saturday. The battlefield has fallen utterly silent. The violent, chaotic war for liquidity that has defined the new year has ground to a halt, plunging the market into a state of extreme, low-volume compression. This is a quiet before the storm. The final calm as the market coils with immense potential energy for its next major, violent move. Looking back, the month of January has been a brutal landscape of failed trends and vicious chop. This is perfectly captured by the predictive indicator above the price, which has painted a series of violent V-shaped reversals. Brief and hopeful blue ascents, marked by long signals, have been systematically and repeatedly crushed by sharp yellow descents and quick, close signals. The latest long attempt has suffered the same fate, with its blue line flattening out, reinforcing the profound underlying weakness and the bear's control of the larger structure. Today, Saturday, January 24th, the session is defined by this extreme compression. The price is locked in a razor-thin range, fused directly to the white moving average around the 89,500 level. It is being squeezed tightly between the upper red and lower green Bollinger Bands, a classic sign of immense energy being built up before an explosive price expansion. The liquidation heat map provides a chillingly clear picture of this war. The price is not just in a range. It is trapped inside a massive, bright yellow band of liquidity that stretches between 88,900 and 89,500. This is a major high-volume node, a true battleground fortress that must be decisively broken for a new trend to begin. The next major upside target, a cluster of short liquidations, sits near 91,300, with a larger wall at 93,000, while the next major pool of long liquidations waits below 87,700. The volume speaks with profound silence. The massive purple spikes that defined the recent conflict have vanished, replaced by a pre-weekend whisper so quiet confirms that both armies are waiting for a catalyst to initiate the next major battle. The best trading strategy in this environment is one of extreme patience. Trading inside this high-liquidity fortress is a low-probability gamble. The highest probability play is to wait for a confirmed, high-volume breakout that escapes this zone. The probability of a sustained trend emerging from this exact spot is low, but the probability of a violent breakout is exceptionally high. The multiple failed rallies give a distinct edge to the bears. Condition for continuation. For a new bull trend to be born, the bulls must force a decisive high-volume breakout above the liquidity fortress, specifically shattering the 89,500 ceiling and then attacking the 91,300 resistance. This would invalidate the series of failed rallies and signal a major victory for the buyers. Condition for reversal. This remains a path of higher probability given the monthly context. If this consolidation resolves to the downside with a break below the liquidity floor at 88,900 on a surge of selling volume, it would indicate that the recent stability was merely a pause for sellers to reload. This would resume the larger downtrend that has defined January, with a first target at the 87,700 support level. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.